Hi students, so this lecture for BBA second sem on the corporate accounting, and this is one of the last methods for the evaluation of the shares, and last method is which is the fair value of shares. Okay, so now see what is the fair value of shares. The fair value of shares is nothing but what it is a combination of both the net assets and the yield method. Okay, the net assets method and the yield method is nothing but the fair value of shares. Okay, whatever you answer got from the net asset methods and whatever you got the answer from the yield method, now you have to combine it. Okay, and divide by 2, you will get the fair value of shares. Okay, so it is a simple average of intrinsic value and yield value of a shares. Okay, it is nothing but the simple average. Like this, how we calculate the average? No, like this we have to calculate the valuation of shares under the value of a shares. Okay, then what is the formula for the valuation of the shares under the fair value of shares? So fair value of shares is equal to intrinsic value plus yield value divided by 2. You will get the fair value of a shares. Okay, so now see problem on this. So this is the problem. So see, the following is the balance sheet of Bharat Limited as on 31st 3 2015, and the assets, it means equity and the liability of rupees 2,24,000, and the asset is the 2,24,000. Okay, so now see the note, this note are given how its share capital it came. Okay, the 1000 shares are there. So here note is there, yeah, above. Okay, share capital 1000, equity shares of rupees 100 each, fully paid is rupees 1 lakh. Okay, next reserve and surplus, how it came, the reserve and surplus rupees 30,000, it's shown here in the note, as well as the related the tangible fixed assets, note number 3. Okay, so now see this note number 3 here. Tangible fixed assets, land and building, it's a 55,000, plant and machinery 65,000, like this, as well as the trade receivables is 4, it note number it's a 44. Okay, so like this the what's the given note is given, as well as see now the other information. The expert valuer valued land and building at rupees 1,20,000, land and building 1,20,000, goodwill at rupees 80,000, and plant and machinery at rupees 60,000. So depreciate is charged on building at 10% and on plant and machinery is 15%. Out of the total debtors of rupees 4,000 are bad. So the profit of the company were 2012-13 rupees 42,000, and for 2013-14 it's rupees 35,000, and 2014-15 rupees 47,000. And the company follow the practice of transferring 20% of the profit to general reserve. Similar type of companies earn at 10% of the value of their shares. Okay, so with the help of this information, no, we have to calculate the intrinsic value as well as we have to calculate the yield value. Okay, so just see the first sentence, which is the expert are valued at land and building at rupees 1,20,000. So the now series note number 3, land and building, it here is a 65,000. Okay, and here it's 1,20,000. So this 1,20,000 is nothing but the market value, and this 55,000 is nothing but the book value. And for calculation of the net assets available at that time, we have to take the market value. Okay, so here in the note it's given the plant and machinery is rupees 60,000, but in the book value is a 65,000. So we have to take as a 60,000. Okay, like this we have to solve the problem. Just now see the solution. First of all, we have to calculate the value of net assets. Okay, so value of net assets. So see here, total assets as per the revaluation. Okay, so good, all the whatever the market values are given, no, so this market values we have to take as the assets values. Okay, instead of the book value of the assets in the whatever the balance sheets are given, these values, instead of that we have to take the market values. Okay, so goodwill it's 80,000. Okay, so in the what in the balance sheet it's intangible fixed assets is given as what's the 10,000, but in the what in the market value is given rupees 80,000. So this 80,000 we have to take. Next, land and building. So now see this land and building in the market book value is given in the note number. So see here note number 3, land and building is a 55,000, but in the what in the other information, land and building is rupees 1,20,000. So this 1,20,000 we have to take as a market value. Next, it's a plant and machinery 60, plant and machinery is the 60,000. So now see in this other information is given is a 60,000, but in the plant and machinery is a 65,000 for what market values. Okay, so this book value is given, so market values is a 60,000 we have to take. And next, patent and trademarks is the book value. Instead of that, because the market value is not given of the related to the patents, directly book value is given, so that's as it is we have to take the book values. If it is not given the market value, as it is we have to take the book values. Okay, patent is rupees 10,000, stock also book value is rupees 24,000. Sundry debtors, see here in the note number, it's a 4,000, it's the bad debts, and in the balance sheet is given rupees 44,000. so this bad debts we have to minus from these debtors. 44,000 minus 4, it's a 40,000. Cash at bank is a 26,000. The total asset is what 3,60,000. From this total you have to minus the outside liabilities, it's a 94,000. Remaining amount will be the 2,66,000. so this 2,60,000, 66,000 is nothing but the net assets available to the equity shareholders. Now put into the formula for the calculation of the value of shares under the intrinsic value method. Okay, so now intrinsic value of shares is equal to net assets available to equity shareholders divided by number of equity shares. The net assets is what 2,66,000 and 1,000 number of shares, because in the problem it's given here in the balance above the balance sheet. Here is given, just see. So see here, note number 1, 1,000 equity shares. Okay, so this we have to divide it. Okay, 1,000, so 2,66,000 divided by 1,000, it will give what 266 is the intrinsic value of shares. Okay, so we got the intrinsic value. So now we have to calculate the yield value. Okay, so now in this how to calculate total profit for 3 years. Total profit for the 3 years. Okay, so the profit is given in the note. Okay, so for 2012-13 it's a 42,000, for 2013-14 it's a 35,000, and 2014-15 is a 47,000. Okay, so the total is a what 1,24,000. okay, less bad debts we have to minus it. Bad debts is a 4,000, remaining amount was 1,20,000. okay, so this 1,20,000 now you have to bifurcate under the 3 years. 1,20,000 divided by 3, you will get the 40,000 is the average profit. Okay, so calculation of profit available for dividend. Okay, so now first of all we have to calculate for the dividend purpose. Okay, so one more method is there, one more step is there in this fair value method. So now see this average profit we calculate as a 40,000. so add, what's the add, whatever the decrease values of the assets. Okay, and related the plant and machinery value is a decrease. Okay, so now see how it's a decrease. So see here, plant and machinery in the note number 3, plant and machinery value is 65,000, but in the other information plant and machinery is a 60,000. so there is a 5,000 is a difference. Okay, book value is a 65,000 and in the present market value is a 60,000. it means what 5,000 decreased. Okay, so on this decreased we have to calculate what's the depreciation. Okay, plant and machinery on 15%. Okay, so this 15% is calculated on this 5,000 and it is added in the average profit. Okay, so add decrease in depreciation on plant and machinery, that is 15% on 5,000. so 5,000 it's a decreased. On this decreased value we have to calculate the depreciation 15%, and so 15% is nothing but the 750. Okay, so this 40 plus 750 it's a 40,750. next, whatever the increase values, on this increase values we have to add the depreciation. Okay, so less increase in depreciation on land and building 10%. so this 65,000 decrease value on that, it's the 10%, nothing was 6,500. the adjusted profit is what 34,250. okay, so less transfer to general reserve, that is a 20% of 34,250, that is 6,850. okay, so after minusing this, profit available for dividend or distribution is a 27,400. okay, so now just we have to take this 27,400 rate of dividend. so profit available divided by equity share capital into 100. so this 27,400 into 100 divided by 1 lakh, you will get what's it's a 27.40% is the rate of dividend. Now put into the formula, ED value of shares is what's rate of dividend divided by normal rate of return. so this 20.4 into 100 divided by 10, it will be the 274 is the yield value of a shares. Now combine it, the what's the net assets value and the yield value. So fair value of share is the intrinsic value plus yield value, and the intrinsic value is a 266 plus yield value is a 274. The total is a 540 divided by 2, and the 270 is the fair value of a shares. Okay, so like this you have to calculate under the fair value of method. Okay, so it's very important for your exam oriented. Just try to understand the note down in problem in your notebook. Okay, so thank you.